Hello, greetings, and salutations. My name is Matt, and this stock speedrun, today's stock speedrun, actually comes as a viewer request. This came as a request from Mr. Official Cares, who is apparently leader of the Straw Hat Pirates. He apparently had a dream about VINP, Vinci Partners, which is a stock that I did a speed run of as part of the original series and have not taken a look at in a while. Apparently, I wasn't too enthused on it. I gave it a hold at the time, and that was solely because of a very glowing review by Goldman Sachs that it gave it at the time. It had not been on the market for very long, so I didn't have a whole lot to go off of. But a lot of big names like that seem to be hype about it, so I gave it a hold at least. We'll see if that holds up and what I think about it now. So, if you have not seen one of these stock speedrun videos before, I would strongly encourage you to. Oh, I apologize. I've been losing some kind of crazy stuff going on in my life right now, and it's making me talk a lot more than I usually do. So I'm losing my voice a little bit recently. So I apologize about that. So I'm going to try to not to let that get in the way of this video. Anyway, if you have never seen one of these videos before, I strongly encourage you to check this video description for an explanation and a disclaimer as to its content. This disclaimer is especially important to you, Official Cares, head of the Straw Hat Pirates. Do not take this as gospel, but you are more than welcome to have what I talk about here and my decision making be input into the decisions that you then make. So, go down to my little magic box here. I'm going to type in VINP. So that's what's going to pop up, and let's see what it's been up to in the last year and a half. Vinci Partners Investments. So hasn't been doing great. Hasn't been doing great since it went public. When I reviewed it, if I remember right, it was trading in the teens, the high teens. I think. Let me actually take a look at the max chart. Yeah, high teens makes sense. I think I looked at it. I could have sworn it was 17 when I looked at it. And again, that was early to mid 2021. Might have been around May, June. Might have even been March. Gotta think back to when I started doing these. Jeez. And it had. So I gave it a hold at the time because I wasn't super enthused with what I saw, and the only glimmer of hope that I saw was some articles from big names, again like Goldman Sachs, who seems to like this, seems to think that it was supposed to be the next big thing or one of the next big things. That apparently has not panned out in the last year, and Official Cares, I don't know if you're legitimately talking about you had a dream about this, or if you just chose this to look at. I don't know why. It seems to be nothing special to me just based on the chart. But why don't we go take a look at some things that we can look at? So they do financial asset management platform, private equity, infrastructure, real estate, credit, all that good stuff. And I wanted to go double check that because first thing that I notice here is that their earnings, especially the earnings to revenue ratio, is very good. This is like something that you would see akin. You only see margins like this from something like a bank. I've only ever seen margins like this from a bank. And investment company, bank, kinda in the similar space. So it would make sense that they have similar profit structures. So that makes sense. I mean, they're doing profit. That's more than a lot of other companies can say. And I don't know how much I should let this downtrend get sorry, I'm trying to think about how to say this without saying down twice. I'm trying to think about how to not let this downtrend get me down, because it's clearly a profitable company. Very interesting that they pay a dividend. That's one of the first things that I saw here. It's not a whole lot of companies you see like this that have kind of had this downward slide that still pay a dividend. That's actually pretty impressive. Let's see. Vinci Parts insiders have a lot riding in the company. Really, 50% insider ownership. That would tell me that the insiders believe in the company. So, not exactly 50%. I don't know. I feel like it pulled 50% out of its ass. This is Simpleton Wall Street we're talking about here, after all. They sometimes aren't really too on the ball. 51% of the business is held by the top 4 shareholders. I don't think that's true, based on what I'm seeing here. That is not correct. Unless they're talking about institutional holders. In that case, these top 4 only have about 20-ish %, which is still, it's still a lot. This is not as much as I would want to see, though. Something that I wish Yahoo, or really any site, would show you is institutional or even insider investment over time. Because I see here that 26.42 or 39.26, depending on which number you want to go by, is not all that impressive. You see a lot of companies with institutional holdings that are a lot higher. Maybe not insider as high. Like, this is pretty high insider. Institutional's not as high. And, well, you could say that institutional is not as high. It's because insider holdings are so high. You're not going to have institutions holding 90% when insiders hold 32%. That's not how math works. It would make sense that that's why institutions hold only 39 when a lot of other companies are higher. So maybe that's still a pretty good number. Where was I getting at this? Oh yeah, the institutional holdings over time. So something I would like to see is that this 39%, 26% isn't terribly impressive on the face of it. Again, it's a little impressive once you take this 32%. But I am wondering, at the time, when I first looked at it last year, or not last year, the last time I looked at it as part of the original series, it would be nice to know. I don't think I looked at this. I don't think I looked at how many institutional holders are. Because if there were significantly more institutional holders then than there are now, maybe a whole lot of them realize this is a sinking ship and they need to jump off of it, that would be a red flag to me. If it was the same or lower, that's potentially a green flag. Because either more ended up piling on, or the ones that did pile on in the early times are in for the long haul. And both of these are green. And both of those are green flags. And fortunately, we don't have those numbers. That's what I mean by insider holding over time. Go back and see how many institutional holders there was back then, which I don't think we can. That'll be nice. That'll be some good information to have. Look at statistics real quick. This is a reasonable PE. Both forward and trailing, very reasonable. 10, 7, 12, even 15, even 17. It's reasonable numbers. Almost non-existent short holding. That's an interesting. Not a lot of people are betting on this going down. Let's see here. Book value per share surprisingly high, but that would make sense since they're a company where their main revenue stream is from having assets. So it would make sense their book value is high based on their general business. Let's see here. What else do I want to see? Oh, are they having a dividend reduction recently? Terms of dividend yields are good, but this doesn't matter much if the payments can't be sustained. Prior to this announcement, Vinci Partners dividend was making up a very large portion of earnings, and perhaps more concerning that it was 100 to 40% of cash flows. How is that even possible? There was actually no... So according to this chart, there was no dividend when I first looked at it last time. That might have swayed my opinion. If there was a dividend, and it would make sense there wouldn't be a dividend. I can't think of a company that had a dividend directly from its inception, because when I first looked at it, it had only just recently come on the market. I don't even think it had its first earnings report. And doubtful. Happy the dividend income they have received. We reduced to 71 cents. Share buyback program, really? So early in your public lifestyle or life cycle. Buy back 60 million of the company's outstanding Class A common shares. Really? Interesting. Is there anything I want to look at? I can't think of any. I mean, so far, this is looking like a solid investment to me. A rare instance where a general downward trended chart does not dissuade me, because the chart is the only thing that is giving me a bad sign here. Everything else seems decent. You have decent revenue and decent earnings. You have a lot of insiders holding. That's always nice. You have decent, not great, but decent institutional ownership. Low short interest, good book value, decent PE. Let's see, what else? What other green flags can I give this? Dividends. Apparently their dividend isn't as much. It seems like it is back 17 now. This is the second article reporting 17 cents. Dividend will be increased to 20 cents. Okay, well, can we make up our minds here? Actually, you know what? I just remembered. The way that Yahoo represents this is yearly. I forgot. This is yearly dividend. 17 cents, then that would make... Well, that would make sense. Because 17 times 4 is probably 71. I'm not gonna do math right now. If it's increased to 20 cents, so it says increasing to 20 cents, but then it's still paying 17 cents. When is the 20 cents supposed to happen? 8th of December last year, assuming. Okay, well, that apparently didn't happen. It apparently didn't happen because in February they announced a dividend of 17 cents. Let's see. There's 17 here. Dividend history. There any time where it bumped up to 20 cents? No. Was it? Oh, no, wait. Oh, wow. They seem to move it around a lot. Start out at 30, then to 16, then 20, and I guess they realized 20 was too much. They go back down to 17, and it's like, oh, wait, we got some extra cash now. Let's give them 20. And then now we're back to 17. So, I mean, that article wasn't lying. It was 20 for a time, or a quarter. It's something, I guess. So it seems to go back and forth a lot. That makes me wonder about its viability going forward. If they're more than happy to play fast and loose with the numbers like this, then what's stopping them from making it zero? What's stopping them from saying, sorry, no more dividend. You can't afford this anymore. Waiting for $7. You might be waiting a while, friendo. Oh, wait, you want it to go down to $7? You still might be waiting a while for that. Politics holding us down. How so? That doesn't make sense. Speculation on who's holding us or buying. Open position. 300 at 9.3. Yeah, good luck, friend. Good incoming. Not a whole lot of chatter. Not as much chatter as I would have expected. It's that's surprising. Again, the chart is the only thing I don't like. General downward trend. Numbers kind of all over the place. Rarely traded. I don't like companies that have gaps between huge gaps between shares being exchanged. It makes it very difficult to get a good representation of the price at a particular point in time. Unlike stocks that are traded constantly and you constantly have the numbers moving, stock like this bothers me because the numbers aren't constantly moving. And that means that the numbers aren't up to date. And if the numbers aren't up to date at any given moment, then who knows what anything is worth. That always bothers me. It also tells me that the stock just doesn't have a whole lot of action in it. It doesn't have a whole lot of action in it. And for better or worse, the stock market kinda goes on hype sometimes. It kinda runs on hype sometimes. And if you can be the best company in the world, but if you don't have the attention, if you don't have the eyes on you, if you don't have the hype train chugging up behind you, then sometimes you might be left in the dust. The question is now, what do I want to give this? I was kind of thinking of giving it a buy, and I know I said that the chart is the only thing that worries me, but the chart really worries me. Chart is throwing so many red flags at me that if this was a date, I would say it was nice to meet you and walk out. I would say it was nice to meet you. Say I have to go use the bathroom and then just not come back. That's how many red flags that chart is giving me. Not just the general downward trend, not just the seemingly volatility, which honestly the volatility is probably a side effect of the sparsely traded aspect. But that's another thing that's worried me. I've said it time and time again. I don't like things that have large gaps in trading because it becomes very hard to get a general market consensus of fair value. Not just at any one time, but also in general, in the long run. So those things are kind of taking me away from a buy. I mean, I guess also the fact that the dividend seems to go up and down seemingly randomly, that worries me a little bit, because again, what's stopping them from saying, now it's 17, well, next month it's going to be 15, and then next month it's going to be 12, and the next month it's going to be 8, and then next month it's going to be 5, and then next thing you know, you're bag holding a company that's not paying you anything. This is actually a tough one. This is a tough one. I don't think, in all good conscience, I can hit that buy button. I feel more than comfortable hitting that hold button. I do not feel comfortable hitting that buy button. It's almost like I feel something is lying to me. It's almost like I feel like the chart and everything else I saw are so at odds that something is lying. And if I have to choose what is lying to me, it's not going to be the chart. The chart is always the beacon of truth. Everything else around the chart, around the company, is subject to whims and biases, but not the chart. Chart is love. Chart is life. So, yeah, I don't think I can give this a buy. I apologize, friends, but I do not think I can give this a buy in all good conscience. I mean, hold is still pretty good. You know, that means if you have it, hold on to it. I think, you know, you're already in it. You're already in it, and if you're already in it, you got a decent chance of making it out. Not terrible, but those chances aren't high enough for me to give it a buy. That's just basically what. Anyway, I think I've rambled about my decision enough. Thank you for watching, and I will hopefully catch you in the next one with a more combobulated voice. So I'll see you then.